Futures point to a slightly lower open as the ECB leaves rates unchanged and boosts quantitative easing. In corporate news, Credit Suisse trades lower following a surprise fourth quarter loss, while Pepsi announces job cuts. The earnings calendar is full once again, and economic data includes jobless claims and natural gas inventories. I'm Jill Malandrino, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrino with TheStreet, and together we bring you the morning call. Welcome to another day on the tape where we're continuously grinding a bit higher in the stock picker market. A little bit late on economic data this month, but we're still very heavy on the earnings calendar.
Yeah, we're getting to the point in the market where it's becoming a bit of a tricky spot because, like you said, we're grinding higher, so traders are trying to figure out how long can we stay. You know, we've all put on some hedges in the last week trying to make sure that we're safe, but every time, like in the last day or two, we've had a downtick. You know, some guys, are getting away from the thesis of adding strong stocks. They'd rather add to their hedges, but then the market just continues to get the bid and close strong. So it's a bit tricky right here, even for guys trying to be bullish like myself.
Right. Well, it's tough for the guys who are the closet bears because their biggest argument is, well, there's no volume. And like we discussed in the Morning Call Express, hey, look, when that retail money comes back into the market and that's where your supply is, this thing is really going to take off because your retail guys don't come in to short the market.
Well, closet bears are getting their teeth knocked out. If they're shorting the whole way up, they're just having opinions. As far as even bulls and guys trying to ride the trend at this particular point, it's a little tough because once you get a little frothy, it's hard to stay heavy. It's hard to be in a tier 2, tier 3, but you have to stay the course because if you start fighting it too early, you'll give back some of the gains that you've had since that December 20th gap and go.
So what levels are we looking at going into trade today for the SPX?
So let's just take a quick look at the chart right here. You'll see we are still in this ascending channel to the upside. This rally got energy way back on December 20th when you had this gap and go. That's when IBD put us back in a market uptrend. Descending channels break to the upside and usually ascending to the downside. Every step of the way, though, we made a new high, we build a floor. Make a new high, build a floor. Fast forward to where we are the past few days, we've been holding this just a 1340 area. So closing on the highs has been good. This is your level of support. We are now about to take out this little cluster. This was like 1347 to 1356. You almost have to go all the way back now to a more macro look. If you look here, the high of last year when we killed Osama bin Laden was 1370. We are now a stone throw away, and if we grind to that area first without any type of 1 to 3% pull-in, it's not going to be the easiest to stay with, but you can't fight it.
Right, exactly. We'll be looking for your level updates throughout the day. Moving along to the sector spotlight, we're going to take a look at names that are going to the 52-week high. We're going to kick it off with CAT. I love the fertilizer space, and because of that, I love the farming names as well.
Yeah, well, with these stocks that we go over are such big names, they're going to give us clues on whether we go to 1370 first or pull back. And Caterpillar's been a great vehicle for investors. You could have bought it many different times. We've talked about it here, and now it's setting up once again. You look at the chart here, Caterpillar, you go way back to when, it was in this channel, we talked about it. This is when I would have liked you to buy your core position. Then once it traded above the top end of this channel for momentum, you've had a nice move into earnings. After earnings, they delivered. It then built a little floor, digested, and now look at this. Nice bull flag here. I'm gonna get you to have a closer look because if this could then get above this, 114.50, 115, I know I'm going to be looking at it for some type of cash flow trade. But once it gets over a momentum level, the key to that type of trade is you stay with it as long as it holds above it. And the best is a 30 to 60 minute commitment show. Then it can extend because that means that level is valid.
Moving along to another big one, IBM. We've liked this name for a long time. Evan and I have spoken about this name several times. I love the fact that not only is it large cap tech, but you're also in the service space as well, which is a key theme for names within that group.
Yeah, IBM has delivered for investors for the decade. Like they say, you have a lost decade. Not if you're an investor in IBM. As a trade, it's been difficult at times, but it does give you a breakout. Recently, after Oracle's earnings, I was a bit sour on IBM. Not sour, just a little bit more hesitant. But it's out of the way. They proved once again that they're on the right path, and now this chart has another level for momentum. You look here at IBM, and you'll see, look how it's holding this upper level right in front of the prior resistance, which is around 195. Nice consolidation, working off this big move off the 180 area. This thing starts to trigger above 194, 195 with some volume. You're going to get a nice cash flow trade up to well north of 200. So this is on my radar for a nice cash flow trade. If you're an investor, just sit tight, stay the course. You'll see higher prices this year.
Moving along to another tech name. We're just really loving the space. Not only fundamentally, but traders love to trade, especially Qualcomm. It's holding above that $60 level, which is really important here.
Yeah, Qualcomm's been another great name, and this one almost felt too easy because you're like, Apple's doing so great, everything's mobile, you know, everyone loves Qualcomm, but meanwhile they came out with their earnings. A lot of us took calls into earnings, you made some money, and now after the digestion we've seen and holding its earnings gap, it should continue. It's not a barn burner move like you have with your Apple and some of the other ones, but it's slow and methodical, and some of those things are good to have in your portfolio because they don't drain your energy. So if you look here, you'll see this was the gap up on earnings, well above this macro level that we've talked about. Remember, we talked about this big accumulation in Qualcomm for almost a year now. They delivered on earnings. It's above this recent resistance, which is now support. And now with a bit more time, I think you could be in here, and I'm going to be looking for an additional trade if we can get above this 61.95, 62 for a nice momentum trade. I'm in tier 1. I will add above 61.95. I'd love to see that 30, 60-minute hold there as well.
That's such a gorgeous chart. Let's wrap it up with Las Vegas Sands, another one with that flag in motion.
Yes, bull flags are a trader's best friend because what they do is they consolidate a big move. They give you a new pivot to enter. In Las Vegas Sands, we talked about before the quarter. I'm like, this has been also like a year consolidation. It means for a year, everyone's holding it. Stock, positions are changing hands. It's under accumulation. It's gonna go. The report actually, after it earned, they reported it was a little choppy. But then people are like, oh, you know what? I like the dividend. It means that they're doing well. They have China. They have everything. So, P.S. You go to the chart and you'll see here. This was the macro. Remember, I showed you guys the weekly chart here. This unbelievable long consolidation for almost a year or so. Well, look where it is now. It's trying to break above this entire level. You go to the monthly chart and you will see that above this 52, 53, the next area really doesn't come into play until almost 80. So for you breakout traders, it's also on my radar. I think that above this flag pattern of 52, you're going to get another nice move for cash flow. And if you're a macro investor, stay the course with LVS. It looks really good for this year.
Wow, yeah, some of these charts are just great. When we are going to go into a quick commercial, and when we come back, we dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to jump into the trenches with another theme, those dividend plays. Investors are loving this, or loving watching these great names put some cash to work. We're going to kick it off with CA, which just increased their dividend 5 times. That's a big number.
Yeah, that's a big threshold. So for this stock, you can get bang for the buck. And we always talk about bang for the buck here, meaning you get it from multiple ends. This one, you could have equity appreciation and get paid a dividend. And I look at this chart pattern, it looks like it's ready to go again. If you look at CA here, look at this bull flag type pattern. This was your big move into earnings, digested it. This is why I talk about stocks that come out with earnings that might not go on that day because of the size of the move, but then you look at it 4 or 5 sessions after, well, look at it now. Next level here to break above is about 26.75. If we were to break above this area, you're going to get a nice trade for momentum. But again, with momentum type plays, even in dividend stocks, you only stay with your momentum tier if it breaks above with some volume and holds above.
Moving along to CNP, a utility name here. It beat its quarter relative to peer. It's got that nice 4.3 dividend yield. Typically, as traders, we don't move around a lot in these names, but if you're looking for relative strength and some momentum plays, here's something new to take a look at.
Yeah, this one I looked at before. It's not quite leading the group, but it's at a lower level pivot. And some of these lower level pivots that you're not involved in work because you're timing it correctly. So if you look here, if you get paid a dividend to hold it, you could wait. And now as far as a trade, you have a nice little pivot right here. It came off the low, so 18 is your point of reference. It's trying to go sideways right here above 19, and you can see a nice cute trade to at least the moving averages of 1940, and then we'll see if it can continue. So right now, it's in a lower pivot. If you're holding it, getting paid to wait for this type of trigger, if it triggers for a trade above 19, I think some traders will get a little excited there.
Moving along to TE, another dividend name. The chart's a little bit sloppy here, but if it breaks that 200-day moving average, and it looks like it's pretty close there, could be another interesting trade here.
Yeah, this one is something that I don't ordinarily trade, but guys are looking to other areas to find new names, and thank goodness for Jill, Stephanie, Alex. They bring these other names that we're not used to, so it gives us vehicles. You look here, nice tight pattern. It's not quite technically ready. I don't like the fact that it has all these moving averages in front of it is resistance. So this is going to need some type of news, sometimes a big, powerful volume surge. So above 1860, you could then see 19, and then it goes back to those highs. So at least you could trade it long versus just say 1780. And I would say if you want to be in this for a trade above 1860, it can get going a bit.
Let's take a look at another new stock for us in the tobacco space, ticker RAI.
RAI. I don't like tobacco or people that's no, I'm kidding. Anyway, that sounds, smokers, they do their thing. Anyway, look at this. Look at this chart. Sorry to be a little discriminatory there, but you run an Ironman, it's hard to do that kind of stuff. With all that said, here is the stock. Here is the chart. You have a defined resistance top that it couldn't get through back at 41.50, 42. It's still not acting great. I would say, I guess if it went above 40.50, it would look a little bit better. But to me, if this were to break 39, it can continue lower. So at least I guess if it has a dividend, you're getting paid to hold it. But technically, it still needs time.
Let's round it off with PDLI. This is a biotech name. I know your guys are always in and out of the biotech names. They're quick. They're easy trade. Well, they're easy trades if you want some momentum.
Yeah, well, this group's been moving, and there's some select trades here and there. If you look at this stock, you will see that it is acting, decently well, or trying to act better. It had a little bit of a false breakout right around here. If you look at actually yesterday, tried to get through, didn't have enough power. This one's different. This one's above all the moving average. This one's technically acting better. So I do think this is a candidate to go. It is a cheap one, and with biotechs, you have to do a little bit more homework than just technicals, because sometimes there's bad news or conferences coming out. But as a trade intraday, it gets above 650. I think you could see higher prices here. And I guess let's take a quick look at the weekly. Yeah, that's. Ooh, look at this. Actually, on the weekly, it tells you a different story. Gets above this 650. There's really nothing in its way to about 713. So that's a big level for PDLI. I'd watch that. And
you're also having the dividend as well. So you're getting paid to hold this name, or even if you're kind of moving it quick in and out of it. Speaking of quick, let's move to quick hits for some quick cash. We're going to kick it off with Cisco. Again, following our large tech theme. This one took up its dividend last night with the earnings announcement.
Yeah, just the problem with Cisco, as I talked about in the last 6 months, has been two trades.
Right.
You had your what was your
the trade into earnings and then the trade following earnings, because this one's always a headache for traders. It gets bid up so much into the print. They have such lofty expectations, and then it comes crashing down after. So even if you're trading the equity or the options, this is always a tricky one to trade here.
Yes. What I was trying to say also with that is it was a value play below 16. Then we talked about it being somewhat of a momentum trade above 19 if you look here at the chart. So even, so here's below, the 16 area. Here we talked about that 19 level, 1902. So at 2040, even if they had a great report, which they had a solid report, it'd be hard for it to continue. I think I'd like to see you buy the dip. Cisco's in the game for higher prices this year, but I'd rather see you buy it around 1950 or so, or maybe even down to the 19 area, besides chasing it up here after a huge move like we've seen since that lower 15 area. Moving
along to a few IPO names, Groupon and LinkedIn.
Well, Groupon was a great trade for us last week. We talked about 2050 to 25. The reason is, as traders, you don't take stocks into earnings because our time horizons are smaller. We're not hedge funds. We're not long-only mutual funds where you could suffer through. So if you take options, that's at least your risk is premium paid. And we saw at Groupon last night, they came out with a decent report. I think their earnings were light, the revenues people didn't like, and lo and behold, it's trading back down to this 21 area. So as a technical trade, breaking this downtrend, it was a great vehicle a week or so ago, and now it's opening down in this area. I would say look to see how it handles here. I might be interested around 21 in Groupon, but I do think if they don't just give it a pass and let it go from negative to positive or take back at least half of what it's down, it's going to be in the penalty box for a little while, because these new issues need to prove themselves fast. They can't come out and just disappoint the way Groupon did yesterday. I would have liked it to have been better because these stocks are fun to trade. So this one I think you have to avoid for a little bit. But LinkedIn, the sell side is saying the earnings should be good. The chart is actually, confirming it somewhat. If you look here also, you do have, this major downtrend that it was trying to break above. We had a decent trade here. Now it's a little faulty. Earnings are after the close. This one, again, just like I said, if you're not going to have a long-term commitment to LinkedIn, don't take the stock, take the options. If it does come out with a great report, you could see 90 here. So for that, if you had to do something, I think with LinkedIn, you take some in-the-money calls or do a more strategic strategy, which you come up with great over at OptionsProfits.
I want to spend a little bit of time on CZR. One thing that you do with the Art of the Trade with T3 Live is you talk about trading a name as it IPOs, which is something that's relatively new for the OptionsProfits and Real Money viewers. So I want to take a look at CZR a little bit more in depth and how you traded that as IPO'd.
That's a great thing to do, because that's one of the things we do at T3 is we love the art of the first day of trading for new issues. When a new issue comes out, we know how to dissect whether or not there's going to be a trade or not, because there's a way to do it with a plan. You know, when new issues come public, there's a lot of stuff that goes on. You have the syndicate, you have the selling group, you have the lead underwriter, and they all have private shares, and there's a lot that goes on. So if you're not involved, with a lot of us aren't, because you're not an institution, you have to figure out whether or not you can make money on that first day. And the way you do so is like this. Let's take a quick look at Caesar. I will show you, what my guys were looking at yesterday and how they got rewarded for using that strategy. So you go to the 5-minute chart. Okay, here you go. This is when it opened up, okay? I don't know, this is actually with a halt. It opened up and printed at 14, right? So this is your opening print. You write that down. Then people who had the new issue, people who wanted to flip it in the first hour, creates a selling pressure. Went it down as low as 11. Right when it crossed this 1150, this would be like a tier 1 saying, okay, I'm going to buy 1150 12s versus the morning low here, which was 11. So you have about a 50-cent stop. Then really, as it comes back up to the morning high or the opening print, you start getting excited, because once it clears, this is where you add around 14. If you added around 14, you had a quick move to 15. It came back, did one more retest. Then once it went above 15, it went as high as 17. So by 12 o'clock, after about 2 hours of being public, you could have had 3 trades here. One around 12, one when it crossed above 14, and then it went as high as 17. So as a trader, this was a great vehicle to make money on. And if it never gets above that opening print, that just means there's not demand. No one's chewing up all the syndicate stock and all the people who are flipping the deal, and it's not worth your time. But if it gets above and stays above this area, which it did yesterday, which was right around like 13 to 14, you get a nice trade here. And we saw that with LinkedIn last year. We saw that with a lot of other new issues last year. So with Facebook coming out and with all the excitement, you learn how to trade the art of the first few days, and you can make a lot of money as a trader without actually getting IPO stock.
Right, that's really great to know, because so many people ask, as a retail guy, how can I really get involved with these deals? So pay attention to the art of the trade. That's something even I learned for myself that's new. Let's wrap it up quickly with Google, your 2012 pick.
Google has been, it shows you that your time frame matters. As a macro investor, if you were holding it, you were a little disappointed in their earnings, because obviously it was down 30 to 40 points. But if you had a plan, you could have bought some to bring your cost average down around the 200-day, which we spoke about many times. So if you are on a macro, time frame, you're doing just fine. I think that we make new highs on the year this year. And also as a trader, if you trade stocks into gaps from earnings, you also made some decent money here. So this was the earnings where it closed. It was faulty. It didn't just go to new highs and make everyone easy money. It went lower. You had to actually work for your prices. Here's a 200-day. Here was that recent low. This is where you had to cost average more in. And if you weren't looking for a macro trade, looking for a cash flow trade, once it went above this 591, which was the high from that earnings miss, you had a nice trade from 591 to almost 610 in 2 days. That's 20 points. So now it's flagging, going sideways, I'd say above 610, 611. You have one more nice move up to about 1620, 1623. And that could fill that gap, and that means that bearish downside gap no longer controls Google, and we could see higher prices in the next quarter or so if they finally start getting it back on track or meeting those excited estimates, because they were showing you that they are on track. Fundamentally, they're strong. I think a lot of the Facebook talk about their valuations, this and that, is showing how cheap fundamentally really Google is. It's just their stock price, and they just never split their stock, so they're perceived as expensive.
Almost like Apple.
Exactly.
It's only trading 11 times, and that thing is so full of cash. Almost the same premise there. So, action-packed morning call for you. We've identified a ton of key themes for you, a lot of stock plays. Don't forget, at the end of the day, every day on T3 Live, Real Money Pro, and Options Profits, Scott wraps up the charts. We take a look at our themes. We take a look at some individual ideas. Have a great day, everybody, and a great week.